Okay, so now we're going to move on to part three, and this is more sort of my macro outlook. Once again, sorry about this, but we just have to do this just in case anyone's missed part one or two. So trading involves the potential risk of loss of capital. It's not suitable for everyone. Hopefully it is for you though. And if leverage is involved, just be careful because you can lose substantially more than that initial investment. Views, opinions, everything included in this is purely for educational purposes. We are not trying to encourage you to trade or advise. That must be your decision. And of course, before you make that decision, consider the risks involved, your financial situation, level of experience, and risk appetite. And of course, only risk capital you're prepared, but more importantly, you can afford to lose. Any doubts whatsoever, seek independent financial advice and do that before you risk your capital. Okay, so moving on to the macro outlook. So if we look back on the data, NFP was pretty much in line. Hours and earnings was just slightly lower than last month's, not too bad though. But Jolts was the big surprise. They tumbled by over 1 million. And I think that we're going to see that continue personally. And that's going to continue to drop, and I expect to see jobless claims continue to increase. We're going to see a little bit of a turnaround there, I think. I expect data now to start reflecting the impact of the central bank's rates hikes, and as I've mentioned, the impact of those hikes does have a lag, but I think now we're going to start to see that show. Again, it's going to take time to see the most recent hikes, but from the early stages, they're going to start to filter into the data now. Now, when China reopened, to a degree, we expected to see a big flurry of consumer demand everywhere. What's important here is to remember that China does stockpile many commodities. And really until those stocks start to drop considerably, they're probably not that tempted to replace them. And for that to happen, that can take probably 6 to 12 months before the markets feel that impact of where they come in to replace, where their supplies have slowly but surely been depleted. Now, inflation, although it's not still increasing, it's not really dropping either, is it? It's such a slow process. It went up fast enough, but coming down, it's very slow. And of course, OPEC Plus cutting oil supply by over 1 million barrels a day certainly didn't help. That cut remains in place until the end of this year. It did push oil prices higher, yeah. And although I expect OPEC thought really, or OPEC Plus thought that the surprise cut would really boost prices by more. Yeah, sure, they went up. They went up $5, give or take a little bit, but that was it. And they probably, I would have thought that they would have probably expected maybe 10 or more dollars, and then even talk of WTI going back over $100. But that just failed to materialise. Now, of course, even that hike of $5 again is a little bit more inflationary pressure. And central banks are still going to have their work cut out to get inflation anywhere close to 2% at the moment. And as I've said in the past, perhaps they should temporarily increase that target. And this is a battle that they're destined to lose, as far as I'm concerned, even for the whole of 2023, let alone how we look at 2024. Although things can change in these markets pretty quick, as we know. But these higher rates, they do hurt households, and it does reduce their spending. But ultimately, it's going to be prices that really decide demand rather than rates, I feel. For me, central banks will end up with little choice other than really just to drive the economies into recession. For me, it's their only chance to beat inflation, and then at least they can reset the economy that way. They can do more quantitative easing, their magic formula, to boost the economy, but at least that will sort of crash demand so that supply is probably in excess of demand, and that's what they're aiming to do. Whether it will be a recession, then will it be a deep one, a shallow one, will it be a long one or a short one? These are questions, we won't get to know the answers to quite yet. So supply is still recovering, but at least, when we look at raw materials and costs, many of them are returned to sort of like the pre-COVID and pre-Russia levels. And yet consumers are still not seeing any of that reflected in the shop prices, especially, and yes, I'm going to say it again, food. Households are still paying top dollar, pound, euro, whatever currency you think about in the supermarkets. And, we're entering the sort of the Q1 earnings reporting season now. So, let's see if I'm right. Let's see if some of these companies really do put in bumper returns. Have their profit margins really dramatically increased? Even over COVID, they was going up to sort of in excess of 15%, which hadn't been seen for a decade or more, with a lot of companies. But I just get this sense that the food companies, especially, and the supermarkets even, may take that to another level. And when this earnings level do set off, regardless of inflation, of more workers, I just see that over, we've seen it with the jolts and all that, that suddenly we're going to see more and more workers actually looking for work, and that's going to ease that shortage of workers. And then, of course, when we get that reduction in the shortage of workers, it's going to reduce wage claims, and people are going to be a little bit more reserved about either asking for a rise or changing their job. They're going to want to go back to having that little bit more security, I would say. Now, the markets, it's that, they could go up anyway at the moment, but again, remember, this is just my personal view, that I still just see stocks as a little bit overvalued in some sectors. However, these earning reports, as I keep just mentioning there on food, etc., you may see some of them put in some really good performance. But then again, are they going to be able to maintain that? To a degree, we've sort of been a little bit sort of brainwashed that we have inflation, and of course we have. But when all those sort of raw material costs and natural costs have been coming down, as they have been, no one sort of comes out and says, well, prices should be resettling now. They should be dropping a bit. You should be seeing this in the high street. No one tells us that. So everyone continues just to pay up. And I think, personally, if you can, support your local industry, support your local guys in the high streets. Give them your business rather than all these sort of titans and everybody out there, all these giants that are keeping these prices up. So anyway, that's just my take on that. So now we're going to go into part 4, which is for those that are interested in the analysis I do of the markets.